Right, morning guys. Welcome back to this week episode of the Trading Dose. Okay, we have been doing this for the past 2 weeks, every Tuesday to Thursday. I hope so far you guys have been benefiting from such session. Okay, we'll give it another minute at 10 o'clock and then we'll get started. Okay, just wanted to come in slightly earlier today so that you guys are able to prep up a little bit. And of course, if you are benefiting from it, you enjoy such session, would really appreciate if you can just drop it in the comments below. Let me know perhaps what's the one key takeaway that you have learned or even benefited for the past few sessions. And of course, if you have friends who are in, trading, looking for intraday kind of like techniques, okay, this is definitely short term, right? So if you have friends who are more towards this style, do invite them to join in this session as well. Okay, you can just give them the website to www.thetradingdose.com. Okay, and of course, feel free to share out this video as well. We do this every Tuesday to Thursday, right, from 10 a.m. and then usually we do it within like 20 minutes or so. Okay, wanting to keep it concise. Great. Okay, so I hope you guys have been so far so good in the market. Okay, while there are a lot of things happening, I'm gonna keep it very focused on the trading dose, right? We're just gonna talk about the FX market, okay, and of course we're gonna talk about more on intraday basis. Good. All right, so let's get started for today. Today is the 2nd of February, so you can see here we're going to update the slides accordingly as we identify any trading opportunities. Okay, for those of you who are very new, all this can be found on the website, right? Thetradingdose.com. Okay, so this is a very quick one here on how we manage this intraday trades. Obviously, I won't be able to keep you guys updated, 24/7. You do still need to put in some effort to keep updated on your trades. So this is the technique that will guide you in terms of how you want to manage those active trades that are already in profit. Okay, so right now we are in week 5. So I'm going to update all this. Of course, right now we do not have any trades. Okay, and over here is basically 0, right? So I will update this throughout the week as we progress. All right, so let's get started. As of last week's trade, all of them has already exited. We do have an outcome. Okay, so far no trades has been running. So we'll take a look at the market today and start identifying some good potential trades to pay attention to. Right, let's start off with the euro dollar. Okay, so from a higher time frame, obviously you can see right now this is in a range bound environment. Okay, and usually during this conditions, what we want to do is we look for harmonic patterns, right? That's where the patterns perform the best, is the most effective way to use it. And when I come down to like the 30-minute, the 1 hour, which is the intraday setup, at this very moment, we do not have any potential trades, I would say. The closest one over here is actually a potential sharp pattern. Okay, that we can definitely consider. The only thing here is okay, it's technically not very valid. Okay, so I won't talk about it too much. Because this leg here doesn't really touch the 38.2. That's the minimum. Okay, so honestly, no trade as of now. Some of you might look at this as a potential double bottom or even triple bottom. I don't really like looking for the buy setup because on a higher time frame, the momentum does looks like it's going down. Okay, so for today, we're just gonna skip on euro dollar. Nothing much happening over here. Okay, next up here on pound dollar. If you do take a look at a higher time frame, it looks like the top has been potentially forming. Okay, we do have this clear divergence happening on the 4-hour time frame as well, indicating that there's a very huge potential of a reversal. Okay, on the lower time frame though, we do not have any potential setups based on the techniques and the method that we use. Okay, some of you might be just doing this like pulling the fibs. Let's take a look at 618 and enter the trade. I don't really do that. Okay, so that's not the strategy. But as of today, again, nothing much that we can really take it. Right, even on 1 hour, there's no setup for me. Okay, so you can see over here is just basically very, very strong up and down move. Okay, I'll give it a day. Again, today we're not touching this. We'll give it a day and see how it goes. Okay, Next up, we do have the Aussie dollar. Okay, so on the 4-hour time frame, it's pretty much a mixed direction. Okay, so you can see, yes, it's high, it's forming a lower low, lower high. It's technically in a downtrend. Okay, but at the same time, if you take a look at like the daily, it seems like this is just a smaller correction. Okay, so on the intraday basis, it's not that clear as to which direction you really want to keep an eye and focus on. Okay, but today over here, we do have some potential valid patterns, right? We are looking at harmonic patterns for today because you can see on the 1-hour time frame, it is in a consolidation phase, right? It's basically going sideways. Okay, there are like the bigger patterns over here. If I were to put in this, you can see one completion patterns ends here. Okay, but I highly doubt that today we're going to get this because there's about close to 80 pips of move. The average daily range of Aussie dollar doesn't hit that high. Okay, the other one is actually a smaller pattern that is over here. Okay, and this pattern here is a bad pattern. It completes somewhere around the 886, right? And this looks a little bit more realistic in terms of if we are looking to execute trades today, right? That's about like 40 pips of move. It can complete by today. Okay, this is a sell trade. If I were to show you another pattern that's potentially forming, of course, that is your butterfly pattern. That will be a buy trade. Okay, but this is really borderline because you know, if I were to pin it really nicely, it's like it's probably just like 1 pip or even less than a pip before it's being invalidated. Okay, I don't like buying the Aussie dollar as of now, so my main focus will be really on this bad pattern. Okay, it's a smaller bad pattern. But right now there's really not much of a confluence, right? You can see based on camarilla, it's beyond the range of the camarilla, so it's gonna be definitely extended once we, as in price today, if it keeps going up, it's gonna be extended way beyond the camarilla for today. Okay, so there's not much of a confluence that we can get from there, but there's a, you know, it's just basically some minor structure level, and of course, this is a valid harmonic pattern. Okay, so I'm gonna put in this order. I think you know, the risk to reward and everything, it's worth taking that. Okay, the stop loss is definitely gonna go above this high here, and the target for today, okay, we're gonna keep it at the H3 over here. Okay, a bit conservative, but I think the stop here is very, very tight. It's like what, 15 pips or so. Not the most ideal way of, you know, executing trade. I think the best range of stops you want to give the market is somewhere between like 20 pips to 30 pips. Okay, but I'll still take it, right? And just see how this trade is gonna go. All right, so I'm gonna take a screenshot on this. I'm gonna create a new folder. This is on 2nd Feb, right? Okay, so we're gonna put this into the PPT as well. So the entry here is about 7692. Okay, the stops is gonna go above like 7705. You might want to add in maybe like, I don't know, give it another 1 pip, right, for spread and things like that. Target here is 7635. Okay, let me update this as well. Right. Okay, let me put that in. It's gonna go 927706 and 76. Right, let me just take a very quick look at that. Yeah, right, I think that's fine. Okay, so that's the first trade for today. The other one that's very, very similar here is the New Zealand dollar. Okay, now if you take a look at the 4-hour, I think again, very obvious, this is in a range. We're gonna utilize the harmonic structure. Okay, for this one here is a buy setup. Okay, it's gonna happen and complete around the 786. That's a godly pattern, right? So it looks something like this. Okay, so this one here we'll be looking for buy. There's some minor confluence with the camarilla L4. That is just a small one over here. In terms of like other things, not really much. Okay, so yeah, so this is a potential pattern. It's definitely valid. Okay, looking to buy. This year you are looking to capitalize on the range, right, up and down. So in terms of like target, I'm gonna be a bit conservative. Okay, so the stops is gonna go definitely below this. I'm gonna put it just at the H3, so that's about like 1:1. You can see on this. Okay, so it's a very, very conservative target because again, if we are looking at a range, there's no clear sense of direction. You want to be a bit conservative in your take profit. Right, so I'm gonna take a screenshot on this as well. We're gonna add this in. Okay, on New Zealand dollar. Okay, so this is yeah, correct. This is a sell limit. This is a buy limit. The entry is gonna go in at 7130. Okay, stops is at 7104. And the target here is 7170, right? Okay, you want to, just edit your like stop loss take profit entry by that 1 or 2 pips, depending on your own personal preference. I think to me that 1-2 pips really doesn't make a diff, right? Sometimes I like good numbers, but sometimes at the same time, because the movement of the chart is really, really small. Okay, that 1 pip kind of like I would just put that in, right? 0.104. Okay, and that's gonna go in at 7170, right? Right, so this is how it looks for this trade over here. Yeah. Okay, so you can see at least a minimum risk to reward 1:1. That's the minimum required for me. Okay, next up, let's look at the dollar CAD. Okay, if you look at 4 hour here, you do see a very obvious uptrend, right? You have a technical higher high, higher low. We are in an uptrend, so definitely I'll be more interested in the buy direction. Okay, so over here, we do not have a trend following strategy at this very moment because you can see this high here. Okay, this high here has yet to be broken. And then this low here is still intact, right? So technically we are in an uptrend, but we can't utilize the trend following strategy because this here has already did its retracement. Okay, but at the same time, what I'm seeing over here is there's a potential pattern that we can really capitalize on that as well. Okay, that will be a godly pattern that completes somewhere around that area. And this is how it looks like, right? So again, I might think that this will not complete today. Okay, that's about 100 pips. Yeah, dollar CAD usually don't move that much within a single day. Okay, so what I'm gonna do is, yes, this is a valid pattern, but I'm not gonna put that in first because I don't think it's gonna likely, hit our entry by today. We'll come back tomorrow and take a look at how it does. And of course, you can see based on our entries way beyond the camarilla zone, right? Okay, so usually the camarilla tells me that roughly that day, that's where the range of movement is. Okay, so if it's out of it, likely it's not gonna tag the entry. Okay, which means that from an intraday perspective, I'll just leave it and I'll come back tomorrow and take a look at it. Okay, next up is the dollar yen. Okay, I'm not sure how many of you are really riding into this. Of course, over here we're doing short-term trading, but we are also doing swing trades, right? Of course, not in this kind of session. Okay, but in our community, we do swing tradings as well. And this is where even at the trading dose, right, we shared with you before on a bigger scale, the upside on the dollar yen is crazy. Okay, you want to really keep an eye on this pair. So we have been trading this to the upside, taking profits, entering, taking profits, entering again. Okay, that's the beauty of intraday, right? You're always looking for new opportunities. When it hits your target, you're happy with it, get out. Okay, so at this rare moment here, we do have technically the continuation of a trend. You can see over here all these fractal indicators. They are going to the upside, right? You see a higher high, higher low. Okay, so one way to take a look at this, we do have some minor confluence at the 618 for today. Okay, you do see the L5 camarilla. On the higher time frame, obviously it is not like a very strong one. Okay, you do see some rejection, but to me, that's not a very strong structure resistance or support resistance. Okay, but nonetheless, I'll be happy to execute on this trade. But the one thing here, of course, you need to factor in, like, again, this stop loss here is super tight. Okay, yeah, right. And for me, the target here is, because this is a trend environment, I'll be happy to be pretty aggressive. I'll put my target over there. Okay, this is about 30 plus pips. Yeah, right. So I'm gonna put this in, but just want to keep you guys informed that the stops are a bit tight, right? Okay, same thing as Aussie dollar. You can see here 769 to 7706. That's pretty tight. Okay, pretty tight. So this one here, the entry will be 104.5. Stops is 103. Sorry. Okay, one way to adjust this is, of course, you can reduce your can like lower your stop loss to this low here. Okay, that's a bit more conservative way of setting a stops. For me, I always become very aggressive, right? Maybe this time around we're just gonna put it here. Okay, that's at 104.16. Okay, I'll put it at 104.15. Okay, so that's about like 35 pips, right? So it's a bit more decent in the room for price to actually wiggle around. Okay, so this is how it goes. I need to redo that screenshot, right? Right, so this is the trade. Okay, let me put that in. 104.15 and 105 is the target. 502, right? Need to put that up a bit. Right, so this is another order. Okay, you can take a look. At least the risk reward is 1:1, right? You can see over here slightly more than 1:1. That's sufficient for me on the short term basis. Okay, this should be gold. Okay, last chart here to take a look at is gold. Okay, you can see on a higher time frame, this is on a range environment. Okay, moving sideways. So we'll definitely look for like harmonic patterns. Okay, but if you ask me right now on the lower time frame, this is like crazy choppy charts, just very noisy. In a way, it's not clean. It's not easy to identify anything. Okay, so if you ask me for now, at least for a short term intraday basis, just stay away from gold. You know, it's just not nice right now what is developing. Okay, so that's really all for today. Just a very quick summary. Okay, we are looking at 3 potential trades here. Aussie dollar looking to sell. Okay, New Zealand dollar we're looking to buy, and dollar yen here we're also looking to buy. Okay, so that's a quite good of mix in the direction of the dollar here. Okay, New Zealand dollar, of course, if you're buying this pair, you're selling the dollar, and of course, this two here, you're buying the USD, right? Okay, so you want to factor all those things about risk exposure in as well, and of course, taking note that Aussie dollar here, the stop is pretty tight. It's about less than 20 pips. Usually, what it means is, of course, your risk will be lower. If you're putting in like the same sizing of each of this intraday trade, your risk will be lower. Definitely, that's a good thing, right? But at the same time, understand that because if your stop loss is tight, it's easier for it to be tagged. Okay, it's easier for it to hit stop loss. Okay, so do have that in mind. Okay, now one technique, perhaps since we're on this, you can actually utilize a fib to help you increase your range of stops a bit. Okay, you can actually utilize the 113. Okay, so usually we just set it at the top here, right? But because there's a potential that we get tagged out of it based on like spread or anything, because it's really, really small. Okay, you can actually extend this to like 113. Okay, which is somewhere around like 7717. Okay, and that still gives you a pretty solid risk reward ratio, right? So with that, that's about like 20 plus pips. So maybe what we'll do is we'll do that, right? We'll increase this to 7717. I think it's a little bit safer, right? Compared to like 10 plus pips. I think it's a bit too tight, right? So I'll probably need to quickly redo that drawing and that screenshot for you guys as well, right? Okay, of course, all this only matter if we are in this trade. Okay, if we are not in that trade, it means if price doesn't really continue up and we are not getting involved in this trade, then all this doesn't really matter. You don't need to concern them. Okay, so just to update that a little bit. All right. Okay, so that's really all for today. Again, over here, we are not forcing any trades. The idea here is, again, just go into the market, see for any opportunities that fits into our style, into our setup. If it is, we take it. If it's not, we leave it. Okay, so it's common that each day we have about like an average of like 2 to 3, but doesn't mean all of them is going to get involved. But that's part of trading. Okay, so that's all from me for today's session over here at the Trading Dose. Hope you guys have been benefiting so far. Let me know in the comments what are some of the key takeaways. If you like it, if you're enjoying this, if it actually helps you in your trading journey, let me know in the comments. Okay, and of course, if you have friends that are also in this or perhaps are looking to get started into trading, they would like to know more about it, and you feel that this kind of session will help them as well, do invite them to the Trading Dose. Okay, so a lot of information you can find online on the website on www.thetradingdose.com, including these slides. You'll be able to look at them. Past recordings are all up on the website as well. And of course, the indicators, you'll be able to download them on the website. All right, so that's all for me here today. We'll come back tomorrow and talk to you guys again, right? So see you guys. Bye-bye.